Hey everybody, we have a dire warning that the US could soon see empty shelves. We're going to talk about who's giving that warning, and I'm going to give you my take on it and tell you exactly what I think will happen here. But lots of news to get up to today, to get caught up on. Basically, we've got, of course, the tariffs, the cost of living / inflation, what's happening with real estate, what's happening with people with credit cards. Are they getting behind? Are they getting further behind? Are things getting better? Are people digging themselves out of the hole or deeper into the hole? I think you know what's going on, but let's get into all the details and let's go ahead and start right here. And this is out of the Independent. The tariffs are driving thousands of layoffs at U.S. manufacturing plants. Now, this is interesting because we heard for a long time, we heard that manufacturing jobs are going to come back on day one, that inflation was going to come down on day one. None of these things have come true. Now we're over 3 months into this current administration. And of course, I see nothing but excuses. Well, it'll happen. You just got to give it a few more months. After a year, it'll be wait another year, so forth and so on. Then the 4 years will be up and nothing good will happen. And prices will be even higher in 4 years than they are now. I guarantee that, unless some black swan massive collapse happens, world-changing event like 2020. But then even in 2020, look what happened. Prices went up. We'll talk about that here in a few minutes as well. But yeah, so we haven't seen the manufacturing jobs come back, but there is some hope on the horizon for those that think manufacturing jobs are going to be the key to bringing back the economy and make it better for most people. And by the way, here's that video again that shows what it may look like if manufacturing jobs did come back here to the U.S. A lot of the workers would probably look like this. Unfortunately, that's the U.S., the average U.S. person now. This is an AI-generated video, by the way, so these are not real people, so I'm not making fun of anybody that's real. That looks like the guy from that TV show. Was it Dirty Jobs? What's his name? Mike Rowe or something like that? Anyways, let's get into some other news here, people. And this is on the flip side, companies saying that they may be bringing jobs back to the U.S., and that's a big maybe. These companies say they're investing in U.S. manufacturing here with the tariffs in mind. The announcements come as some of this current administration tariffs have taken effect, with other import duties still pending. In March, for example, there had been pharmaceutical company Johnson & Johnson planning to invest $55 billion in U.S. manufacturing, call it a massive victory for this administration, which the country is now in pursuit of manufacturing dominance, is what they're saying. We have other companies here noted in this article. Another one is Abbott Laboratories. We also have Apple saying over $500 billion is going to be invested in expanding U.S. manufacturing capability over the next 4 years. Chobani, known for its Greek-style yogurt, I've had that yogurt before, plans to spend $1.2 billion opening a million square foot facility in New York. We have Crazy Art. They're going to increase their manufacturing production here in the U.S. Of course, Johnson & Johnson. Honda Motors said it would be moving production of its Civic hybrid hatchback from Japan to the U.S. in face of a barrage of tariffs. Hyundai Motor Company, right? The list goes on, NVIDIA. So you get the idea. So grass could be greener on the other side. Here's what you need to think about when it comes to these jobs coming back to the U.S. Look at the countries that the jobs are at now, where the manufacturing's at now. Do they look rich to you? Look at the manufacturing over in where the most of items that are imported here in the U.S. come from, China. Does the average person in China look good? No, they're working 10, 12, 15 hours a day at some of these factories, and poverty is off the charts. I mean, yes, it's the rich and the poor, but when you look at the globe, it's a lot of it's concentrated at the top. So here in the U.S., you have the top 10%, the 10% that's dominant, owning 90% of the stock market, for example. It's similar in other countries. You have the rich and the poor and the middle class in a lot of countries, not just the U.S., is becoming smaller and smaller. And in these companies where there's a lot of manufacturing, these people working in these factories really aren't making a lot of money. They're not considered wealthy. In fact, most of them are still considered in poverty and part of the poor class, right? And then to add insult to injury, a lot of people agree that even if manufacturing jobs did come back to the U.S., it's going to be a lot of automation, a lot of AI, and there'll still be some people needed to oil the machines, keep the machines running, things like that. The automation, there'll still be some humans involved. So then you say, well, yeah, that's good because the less number of employees you have to pay, the more profitable the company will be because they have to pay less people, and therefore things will be cheaper. But let me ask you this. Do you think if things do become cheaper, if things are cheaper as far as labor, they're going to pass along the savings to the consumer, to you? Of course not. They're going to keep it at the top. They're going to give bigger bonuses to the people at the top. It's all part of this divide where you have the wealthy, the mega wealthy in this case, and the rest of the people, right? So I don't think automation is going to help this. I don't think manufacturing jobs coming back is really going to make a noticeable difference. In fact, I think it may make things more expensive. And there are things they can do at the snap of a finger, at the stroke of a pen, whatever you want to call it, that could reverse all this and bring the cost of living down and make it much easier for everybody. But of course, they're not going to do that because that will destroy the illusion of a growing economy. All right. And a little more over on this whole wealth gap type of thing here, wealth transfer, if you want to call it that. I'll look at this here out of the Journal, Wall Street Journal. The share of U.S. household wealth held by the top 0.1%, folks. And that's $1 trillion worth of wealth created just for 19 of the richest U.S. households last year. $1 trillion, folks. That's a lot of money. That's, what is that? A way to, that I break it down for my kids, and I'm not saying your kids, but a way for you to think about it is 1 billion times 1,000. That's $1 trillion. And I say it like that because I think a lot of people have kind of lost touch of how much a trillion really is and the difference between a billion and a trillion. You have to have $1 billion 1,000 times to have $1 trillion. But people see the debt so high now that $1 trillion seems like nothing. And you see these bankers creating this out of thin air at the click of a mouse. And it goes on here, the wealthiest have gotten richer. They control a record share of the wealth. New data suggesting $1 trillion worth of wealth was created for the 19 richest American households just last year in 2024. Expand that out to over several decades, folks, and you see how this disparity has come to fruition here. And they want me to subscribe here to read the rest of the article. We'll pass on that because you guys get the picture, right? Moving on here, Americans are now souring on this administration's handling of the economy. We're 3 months in. It didn't take that long. We see consumer sentiment plunge to the lowest since the health crisis, and I believe the lowest in 12 years, even worse than the health crisis, the last one that we talked about anyway. So Americans are waking up and they're realizing that things aren't going to get easier. The cost of living is not coming down. Prices going up may slow down, meaning they're going up slower than they were going before or rising before. But people are now realizing that things aren't going to get much easier as we go forward. And we also have this approval rating of this current administration falling to 37%, according to a Reuters poll. Concerns over recession in the stock market due to tariffs and Fed threats, is what they're saying. The right largely support the administration, but the cost of living concerns persist, right? So we told you exactly this was going to happen, folks. The cost of living isn't coming down because the powers that be, the current power structure right now, the administration, they're not doing anything to address the underlying cause of the issue. They're not doing anything, right? It all stems from the money and the banks, people. All right, next, folks, let's jump into real estate and housing. The housing bubble not deflating, in fact, still inflating. Just about every city you look at is still up year over year. And we just had some more news come out here recently. Home sales did jump in March as buyers took advantage of lower prices. This is new home sales. Now, new homes only represent about 15% of all transactions, but still, it's a sign when new homes are still going up, then you know that the bubble is not deflating. And then, of course, there was a minor dip in mortgage rates that kind of reignited some of the sales. But here's what happened to prices. and I'll bring this up here out of Realtor, and it's being reported here that signed contracts for new single-family homes jumped 7.4% last month from the previous month, which was February, to a seasonally adjusted rate of 724,000, according to the U.S. Census Bureau. And that was up 6% from a year ago in March. However, the median price actually in March was 403,600. And so what's the bottom line here? Let me make sure I get these numbers right. Median home price down to 403,600. That's down 1.9% from February and down 7.5% from a year earlier. So year over year, new home prices are down. However, if you look at all homes, including existing homes, prices are still up because most entry-level homes are not new homes. So that's the bulk of the homes that people are trying to buy, entry-level buyers. So therefore, prices are still going up for those. But this could be a sign that people are willing to pay less or not willing to pay top dollar like they were before. All right, but here's, I think, even the worst news here, the bad news. Home builders say tariffs will add nearly $11,000 in cost to build each home. What did we just talk about? A few weeks ago, we talked about how a lot of the lumber that we use to build homes is imported from Canada. All right, certain types of lumber, it's like 80% of some of the predominant lumber that's used to build homes, folks. So don't expect home prices to go down or crash anytime soon unless we get a complete restructuring of the financial system, something that we haven't seen in over 100 years. And when it comes to real estate, there's a couple things that could actually bust the bubble. One would be to stop corporate America or corporate global companies from buying real estate. That would bring home prices down 50% in an instant. Two is you'd have to limit the amount of money banks can loan out, including non-bank lenders. You'd have to limit the money they can loan out to only money they have in deposits, right? That would bring home prices down at least another 20, 30, maybe 40, 50%. So overall, just a couple moves could bring this housing market down by 90% to make things much more affordable. But of course, they're not going to do those things because falling prices makes it look like the economy is crashing. And why is that? Well, when prices are going up, it means people are spending money, and that creates jobs. When prices are falling, that means less people are spending money, and that makes it look like the economy is crashing. So, of course, they're not going to do that. Now, staying on the topic here of housing, the housing bubble, and real estate here just for a minute before we get into the big news, the major news that we talked about at the beginning, and what the thumbnail talked about. Real estate. I see a lot of quote-unquote real estate experts out there. Many of them predicted that there was going to be a housing bubble go bust. I've talked about this many times. But they failed to look at the real issues and that I just mentioned. I hardly hear anyone else say what I just mentioned a few minutes ago about what would bring the housing market down, what they would have to do. What I do hear a lot of is home prices compared to incomes are too widely separated right now, so home prices have to come down, making it seem like home prices are only based on what people are earning. That's not true at all. It's how much money people can borrow, how much corporate money comes into the market, how much money banks can loan out that they don't have, all those things, right? And even if unemployment spikes, right, that would be a big moment where you would think home prices would crash. Unemployment spiking, people don't have any income, or they have to rely on maybe unemployment or go to a different job as soon as they get a job. But we've seen unemployment spike even in the past few years. Did home prices collapse or even drop? No. Let's bring up this chart here. 2020 health crisis. Unemployment, this is the official number. The real number is even higher, I think. It would be closer to 30%. But almost 15% was the official number in April 2020. Did home prices come down? No. Did they crash? Certainly not. In fact, home prices start accelerating to the upside even with that unemployment that we hadn't seen. We hadn't seen at that level ever. That was the highest going all the way back here. This chart goes back to the 1940s. Highest spike in unemployment of all time, folks. And that didn't bring home prices down. So for people out there saying they're a real estate expert or they know what's going on with the housing market and they're talking about home prices versus incomes, folks, nothing to do with it, right? Because they can keep these markets propped up with all the intervention, market intervention, right? But still on the topic of more affordable housing here for just a minute, going over into rents, which about 4 in 10 people still rent right now. Let's talk about rents just for a minute here. Here's some good news, people. Ready? Hold on to your seats, right? Are you ready for this big news? Charlotte apartments, Charlotte, North Carolina, dropped $1, even with record units. So a record number of units hit the market in Charlotte, and you would think that that would be hopefully helping the supply versus demand situation, but only $1. Monthly apartment costs in Charlotte fell by $1 to $1,644 during 2025's first quarter. So this is recent. This marks the 7th straight drop as builders added 17,000 units. So 17,000 units built, folks, and rents only came down by $1 a month on average, folks. So what does that tell you about how out of whack this whole economy is, the housing market, the cost of living, the cost of housing and real estate, the housing bubble, all of this, including rents? And I know there'll be a lot of you in comments that are going to chime in with those two words, corporate greed. Yes, that's always part of it. That never goes away. There's many different ingredients to this, folks. It's not just one thing. And again, I go back to some of these people talking about real estate, saying that homes are too high compared to the incomes, folks. That's part of it, but that's actually a small part of it when you look at the way money is actually loaned out for people to be able to buy homes. And when you look at the corporate investment money coming into the housing market. Right. Also, we have this. 1 in 4 Americans say they can't afford to pay their credit card. Another survey came out recently. 1 in 4 people say they can't do it. Is there a big implosion right now in credit cards being issued because of this? No, credit card companies are still increasing lines of credit for the most part, right? The credit available is still increasing. So obviously that shows you that credit card companies and banks aren't concerned about people's struggles right now. Now, the 1 in 4 people that say they can't make their payment, are they all defaulting? Well, no, that would be about 25%. We're not seeing defaults to that level yet. What people are doing now is they're moving money around. They're robbing Peter to pay Paul. They're getting loans, consolidation loans to pay off their credit cards, which doesn't fix the problem. It just shifts the debt from one place to another. They're getting balance transfers. They're getting personal loans. Still some people getting home equity lines of credit to help pay off their debt. Not as bad as it was in the housing bubble, but it's still happening right now. People are skating on thin ice doing this. Is the ice getting thicker or thinner? I mean, please let me know what you think down in comments. All right, folks, now let's go to this dire warning here. Many news articles are talking about this, news outlets. Here's CBS, though. Just going to show this one. Wal-Mart and Target CEOs privately warned that tariffs could lead to empty shelves soon. So it sounds like a pretty dark and dire warning. It's not me saying that. That's what Target, reportedly, Wal-Mart and Target CEOs discussed with this administration. Empty shelves because of the tariffs. I'll give you my input on it. Well, let me give you a little more over here from this article here. Chief executives from Wal-Mart and Target privately warned the administration this week that his sweeping tariff policy could disrupt supply chains and lead to empty shelves in the coming weeks. We're talking about weeks. CEO of Home Depot was also present at Monday's closed-door meeting. Axios was first to report on this retail executive's warning to the current administration. They're saying they had a productive meeting, and they appreciated the opportunity to share their insights. Target had a similar statement, quote, "We had a productive meeting with the administration, our retail peers, to discuss the path forward on trade, and we remain committed to delivering value for American consumers." But for them to come out and say could lead to empty shelves soon, that sounds pretty dire. My take on it, I don't think we're going to have a massive empty shelf situation. It could happen. It's possible. But remember, nobody wants this to happen on their watch. So they'll do whatever they can do to prevent that from happening. Let me try to figure out how to word this. They don't want a complete wipeout in the economy. They want to keep people in enough debt and keep enough people borrowing money to make it look like the economy's growing. But they don't want a massive implosion because that would look bad for them. That would make it apparent that the economy is not good, obviously, right? Empty shelves, starvation, all those things. So they're not going to let that happen. My prediction is it's not going to be as bad as it's being reported here. There's not going to be widespread empty shelves. There may be some empty shelves. Something's going to be out of stock, right? But for the most part, it's not going to be widespread empty shelves. Maybe I'm wrong. Let me know down in the comments. Is this a mass starvation, mass apocalyptic time frame that we have coming up here in the next few weeks is what's being reported. Let me know what you think down in the comments. Finally, let's get out of here. And before we do that, we have an executive order out now targeting these loan forgiveness programs. So all these student loans, they can't pay their loans. All these debtors that owe this money sitting back and waiting for forgiveness. This is bad news, folks. This new executive order targets public service loan forgiveness, threatening thousands of borrowers, right? So if you're somebody sitting back waiting for debt forgiveness, don't hold your breath, folks, because it looks like they're going to make it a lot harder for debt forgiveness, right? So what's this going to end up looking like, folks? Please let me know what you think down in comments. What do you think about the manufacturing jobs that we talked about at the beginning? If they come back, is it going to be mostly robotics and AI and automated manufacturing? And is it going to be even worse for the cost because you have to pay workers here more? And even if they cut costs, the companies, if they cut costs by going to automation, are they going to pass along the savings to the consumer? No. They're going to charge as much as possible. As long as the consumer can borrow money, they're going to keep on raising prices and charge as much as possible. Corporate greed, greedflation, the way business works. That's what some people would call it, folks. So let me know what you think about this. Let me know down in the comments, folks. I'm going to get out of here. I'm stumbling my words a lot today. Kind of had a short night of sleep last night. I'll leave it at that. Everybody keep stacking. Thanks for being here. Bye for now. Peace.